but let's get you the global price action and what to make of all of what we're seeing. Laurence Balanco of CLSA is now joining us to tell us exactly that. Laurence, great to have you with us here. Thank you very much for your time. You know, from the lows of March, the market has seen such a smart up move. The Indian market especially, we're within striking distance, about 2, 3, 4% on the main indices from all-time high levels. You think in this move higher, we make newer highs and then perhaps move up meaningfully from there? What's your sense?
In the short term, unfortunately, we think we get to top of the range. So we're talking about 18,500, 18,800. That's likely to cap the upside in the near term. And then we see further ranging activity. If you look at the Nifty chart going back 9 months, we've essentially been trapped in a 9% wide trading range between 16,700 and this 18,800 area, which is quite similar to the profile of the S&P chart, which has been range bound between 3,800 up to the 4,200 area, and we see more volatility within that range before ultimately breaking out.
So you're saying that in the near term, the Nifty upside could be capped at 18,500 to 18,800. What about the Bank Nifty? That has assumed leadership, but do you see the Bank Nifty rise well above the 45,000 mark in the near term?
From a longer term perspective, we think that's the key sector to be overweight within India, and it'll be a key driver for an ultimate breakout in the Nifty. But again, in the short term, we're back at the highs seen late last year. We expect some hesitation and a pullback, but that doesn't take away from its leadership credentials from a longer term side. So look at adding on a pullback in the Nifty banks, but in the near term, again, some hesitation at last year's highs.
Hi, Laurence. Good morning. Laurence, what about the S&P 500, which you mentioned was in a bit of a range? It's closer to around that 42,000 odd mark. How are things shaping up out there? And also, I wanted a word on the dollar index, because from India perspective, this rally has also been supported by global QS, a weaker dollar and stable US markets.
Yeah, I think let's talk about the dollar first, because I think this is quite supportive, particularly for rest of world equities over US equities. So the general trend of dollar weakness has seen rest of world equities, in particular emerging markets, managing to outperform US markets. And we see, you know, from a emerging market currency aspect that a base is starting to develop in emerging market currencies that ultimately sets for a breakout from that range. As far as the dollar index itself goes, you know, we've been trapped in a range year to date between 100 and 105. And as long as we stay below 105, we think the dollar has formed a major peak in the fourth quarter of last year. And that sets for a break below 100 on the dollar index and a move down to the 95 level. So from a relative perspective, again, rest of world assets, equities should outperform US equities. At the end of the day, that's a key setup. If we look at the S&P price action in absolute terms, we've got slowing upside. So our momentum indicators have not confirmed this recovery in April and the start of May back to 4,200. If you look at breadth reading, so number of stocks above the 50-day, 200-day, or even the advanced decline line for the S&P, again, that's lagged the recent recovery from the March lows into April, May. So that all sort of points that this 4,200 area is unlikely to be broken on a sustained basis and will remain range bound between the 38 and 4,200 area through the rest of the second quarter.
Laurence, give us a broad sense of what the road ahead will look like, because you're saying 18,500, 18,800 cap here on the Nifty, bank, the US S&P at 42. So we get to that. The market dithers a little bit, but what happens then? Are we going to see a big swoon? Will the market just be flat for a long period of time? I mean, just a general way of to think about what price action may look like after that.
So, yeah, I mean, just to get an idea, through the rest of the second quarter, you know, there's downside risk of 5 to 10% taking you to the bottom end of the range. So nothing changes from the price structure that you've had for the past 9 to 10 months for the Nifty or the S&P. But I think once we get through towards the end of the third quarter, fourth quarter, then we can have a platform for a breakout from those trading ranges. So, you know, assuming that we get it through the 18,500, 18,800 area, third, fourth quarter of this year, you know, we're talking about targets, you know, well towards 21,000 for the Nifty at the end of the day. And again, we think that's led by the banks. But over the remainder of this quarter, you know, expect further volatility that we've seen in similar fashion to the past 9 months.
You're saying 5 to 10% correction in the second quarter? In global markets, I mean, everything India included, right? I mean, broadly.
Correct. Yep.
and then a breakout in the third or the fourth quarter later this year, and eventually the market moves higher. I think you said 24,000 Nifty.
So, yeah, if you look at the upside target from the current trading range, you
21.
basically just around 21,000, yep.
Okay, and by when are you projecting those levers? Sometime next year?
Assuming we break out in the fourth quarter, you know, that should be a first half of 2024 time horizon.
Okay, so you're saying fourth quarter of this calendar year. Got that. So we need to get past this 18,500 mark, and then the next level to watch would be 21,000. Got it. Will the Nifty IT contribute? Because although banks have contributed, the IT index is still down about 2.5% to 3% this year. Do you see a turn there?
Well, we don't see it as a leadership group. Best case scenario, it holds in the current trading range that you see for the Nifty IT sector. So the leadership that you had from 2020 to 2021, we don't think the sector replicates that and prefer the banks.
So if not tech, if you're positive on banks, any other sectors that you think could show up as leaders in the market over the next, say, 6 to 12 months?
Probably a smaller sector, but the real estate sector looks quite interesting, again, with a big base in place, a consolidation pattern over the past 12 months. And there's another setup where we can break out and see leadership, obviously a much smaller component to the market, but an interesting profile.
Indeed, and that's been the big outperforming sector actually here in India. It's up close to 11%, I think, just in the last 1 month or so. Laurence, all that glitters is gold, right? That seems to be the case, and gold has been moving from strength to strength. Where is that one headed? Do you see higher levels out there?
Well, I mean, if you look at it in a number of currencies, the US dollar, you've already broken out. And I think ultimately gold in US dollar terms follows what we've seen in other currencies. And getting through the 2078 era gives us an upside target of 25.50. So, yeah, we would be a buyer there looking for that breakout ultimately.
Oh, okay, so you're looking at an upside target of 25.50 in gold, 25.30 thereabouts in gold. So there's still some more, ammunition left perhaps. Just one more question. You said in the very near term, there could be about a 5 to 10% correction that the index could see. At any point in time, do you think the market, the Nifty, could resume its earlier lows? I mean, 16, 17,000, 15,183 actually was the 52-week low. But do you see that being resumed any time in the near term?
I think the real threat for Nifty retesting that 15,100 area would only really come from a S&P break of the 3,800 area. And we'd only assume that scenario playing out on a much harder landing from the US economy. So that would be the level that we were looking at, a break below 3,800. That would threaten a break below 16,700, 16,800 for Nifty, and then line up for a test of that 15,100 to 15,300 area. Our base case is more of a trading range above that 16.7, 16.8 area, but those are the levels that would need to be crossed to increase the probability of a retest of the 15,100 to 15,300 area on the Nifty.
All right. Laurence, I wanted to ask you about a heavyweight, which is as good as an index, actually, the Reliance Industries. You know, a couple of months ago when you joined on the channel, I recall that Reliance was struggling, actually, closer to around 2,100 odd. How are the charts looking out there? Do you expect it to trend higher? Will it be one of the leaders if the market has to move higher?
So again, I mean, we were looking at that as a trading buy off that 2,100 support area where it's slowing downside momentum. It is more of a trading range setup. Again, if you look at the bank sector, that's where your leadership's coming from. But Reliance holding above 2,100 and trading towards the top of the range at 2,800 it is a likely setup and a trade that I think you can stay long looking for that level.
And SBI is one of the top picks from the banking space.
Yes. So that you've seen the breakout in 2021 from a 10-year long consolidation pattern. So yeah, that's one of the key structural breakouts that you've seen in the banks space.
Laurence, just one last thing. You briefly mentioned that the lows will not be revisited unless you get a big recession or anything. So, I mean, we seem to be in a regime where the market is okay now with higher rates, I'm assuming, for longer, as long as there is no hard landing. But, you know, will that flip at some point when will it once again become good news is bad news kind of a regime? I mean, because we've seen these different phases, the market latching onto something or the other over the last 1.5 years.
I think that the key, if we focus on the US, is the bank sector, both the regional banks and the larger cap banks. If we see a break of the second half of 2022 lows and we fail to get any stability in the US banks, that's when we could see yields actually fall, but yields are falling because of greater recession fears. And if you look at the average performance of the US markets, that's the S&P in a recession, is that, within the start of recession, 200 days post that, the market on average is down 11%, while bond prices are higher, yields are lower. So I think that will be the key catalyst, that US banks have to stabilize to keep the market in the range. But if they keep on breaking down, the risk of a hard landing in the US increases, and the risk of breaking below that 3,800 area. So look for stability in the US banks to at least keep the S&P range bound between 38 and 4,200.
All right. Thanks a lot, Laurence, for joining in, and appreciate your thoughts. That's Laurence Balanco saying that in the very near term, there are some hurdles that the market has to cross. 18,500 to 18,800 is the near-term resistance. If we get past that, then 21,000 is the next mark that he's watching out for. So he's not really cautiously optimistic, I guess, if you'd want to use that term. But he likes banking and he likes real estate. Let's slip into a quick break. Our entire research team will be joining in to help us with the top 10 list of stocks in just minutes from now. Stay tuned.